Hey everyone, Chris Bentley here. I'm your host for Social 333. Today, my guest is Peter Snell. Peter, welcome to the show.
Chris, thanks, man. Glad to be here.
Awesome. Tell the audience a little bit about yourself and kind of your journey and what you got going on.
Yeah. So glad to be here. I'm basically an oil and gas developer focused on natural gas. That's what I do. Disciple of Jesus, father, husband. I should probably put husband first in that list. My wife will be watching this later, but anyway, yeah. So those are the things. AI enthusiast. So I'm really interested in AI. It's been interesting getting applications of artificial intelligence, learning actually what it is, and how far and not far we are with that. So those are the things I'm working on, and interested in the energy demand that's driving my business, which is kind of front and center of my mind these days. So.
Yeah, talk about that a little bit because I've always been interested in natural gas. We had somebody that does oil and gas. I think he does more like the oil side of it than the natural gas part of it. So talk about that because I've traded natural gas on stock market before and it goes up and down. It's pretty cool. Yeah. So there's definitely some money to be made if you decide to do that. But talk to me about it on more of like the actual boots on the ground, that kind of stuff.
Yeah. So if you're trading oil and gas and you're good at trading on volatility in short runs, that's fun. It's good. Some people probably hate that idea, but I'm more of a long-term guy.
I'm not trying to sponsor that. Obviously.
No, I get it.
I don't want FINRA to say anything to me.
No.
Yeah.
And I mean just in general, like I get it, and. We're not traders. We're not financial. This is our disclaimer. We're not financial experts, so don't listen to anything we're saying. So, but yeah, I boots on the ground. One of the things I love about the business is making something or producing something and something that people need. It's at a utility level, and that gives you, a lot of, I guess, interest and long-term comfort around the idea that it's going to be there. Now, there's a lot of things that make you uncomfortable about being boots on the ground, but as a guy who likes to have something tangible in his world, and that's not where I came from. Like I grew up doing, in the business world anyway. As I got out of college, I was in business. I was doing, selling and marketing and management and all these intangible things, which I still do a lot of that, but it's all tied and based, kind of anchored into this idea of producing oil and natural gas. So it's just cool. The tangibility of it's what I love.
How do you get into something like that? I've met some people that sell oil and gas. So this is back, I don't know, when I first moved here, probably almost 15 years ago, maybe 13 years ago. Yeah. And they're salesmen. They go out. They're like, hey, you want to buy a well? Right. And you're like, cool. And that was back when oil was $120 a gallon or a barrel. So like what? I don't understand really like the natural gas part of it. Is it like a gas comes out of the ground, you guys capture it somehow, and then it gets like into tubes and it gets into a truck and then it goes into like kind of talk about that process.
Yeah. So and there's different things like when we could talk about the model, at some point here, but just basics around how we actually harvest this out of the ground. It in most cases comes out as oil and natural gas, and you have basically a product mix. And really you look at it in three major categories. The way we do it, if you think about it very simply, is we take a lot of pictures underground. We look at those pictures for bright spots, we'll call them, and then we say those bright spots have conditions or within the construct of the ground. And I look at it like there's different kinds, so we don't have time to capture all of that. But if you think of conventional or vertical drilling, and they're not always the same, but 99% of the time they are, think about it as you're going into an area where I take a picture of a giant chocolate chip cookie, like 55,000 acres. And inside that chocolate chip cookie are a bunch of chips, and we're looking for all the chips. And inside the chips is the hydrocarbons. And inside that's what you're essentially looking for. Now, to find that, you've got to take a lot of expensive pictures underground to see that. And just because you have good pictures doesn't mean that you've figured out all the cookie parts, if you will, around the chocolate chip to make sure that there's actually a chip, not a fake chip. That's at its simplest level. I say, I like that chip. In our case, I say I like a lot of chips, so we're looking at a lot of different chips, right? And I could actually go in, and basically what I'm doing is sticking a straw. I go and set up the ground on top, and we stick a straw, a little more complex than that,
Right.
but big metal straw, 2 miles into the earth, and we stick that straw in there, and you basically extract it out. Sometimes it's naturally pressured. Sometimes you got to create pressure. The idea, though, is the hydrocarbons, oil, natural gas liquids, which is not to be confused with natural gas, is dry. Natural gas liquids, obviously wet. But we're going down, sticking that straw down there, and then essentially sucking it up. Hopefully it has its own pressure for some time. That's cheaper. It's better. And then that goes into another straw that you have connected to the top of your wellhead. And then that is going in. It's like a sales meter right on the wellhead. It's just clicking as natural gas, liquids, and oil. But you also get, and here's the rub, a lot of times you get water. So you're getting all kinds of fluids and gases at the same time. You have to have equipment on site to separate it out. And so essentially what you're doing is putting oil in one tank, you're putting water in another tank, and then if you have a lot of water, you're putting that water back into other wells that are nearby. We call them injection wells, to make sure that you're getting rid of that. It's highly toxic water. We're not talking about, we found water. It's not that. So that's essentially how you make a well and how you make hydrocarbons, and you sell that to a bunch of people. And we're in what you call upstream. There's midstream and downstream.
Right.
We sell into the midstream. So that's it in a nutshell.
How did you get into something like that? Does you just meet somebody and they're like, hey, like, let's go do some oil and gas and drill. And you're like, cool, let's do it.
Kinda.
Okay.
I mean, I'd be lying if I didn't say that it was a little bit like that, in that, most of interesting business happens through relationships.
Right.
That's what happened here. I was a management consultant, which is fancy words for business fixer. So I would go into struggling businesses and essentially provide them unlock codes and hard information, difficult things to hear to get them to manage their way out of their difficult situation. And I did that same thing with in this situation. I was in management consulting, and I had a friend who, our daughters played volleyball together, and we just got to be friends through sitting in the stands, and it turned into, hey, you want to come take a look? And I said, sure. And that turned into helping him with some of the challenges he was facing. And I loved it so much. I fell in love with the business. That's what happened. I'd never really done that. I was in healthcare, IT. I'm not an oil man by trade. I'm a business fixer, which has a lot of merit and value in my business. And then some people would say not, but I think it's actually an advantage for us. So
talk to me about evaluating like an oil and gas deal.
Yeah.
Because I got, the guy that was trying to sell me on it. I know he's.
Did you do it?
I didn't do it.
Okay.
Yeah.
Why did you not do it? Like, what was the thing that just said, I can't do this?
My grandfather did something like this, and I asked my mom about it when she was still alive. And I was like, hey mom, this guy approached me. He's a cool dude. Like, I just know him from networking. He seems like he's got all of his stuff together. Like, he's wearing custom clothes. I didn't have custom clothes back then. I need a check for $50,000 and get the ball rolling, or 100 G's just to if you really want to make some money, right? And my mom was like, well, your grandfather did something like that. And every time he got his K1, he'd look at it and his nose would flare up and he'd be like, and I was like, I don't want to do that.
Yeah. So that was it. I mean, you guys had some rough family story around investing in oil and gas.
Yeah. It was just it was a bad story. I don't know all of it. Yeah. I just know that he didn't make it. Obviously he wasn't jumping for joy every time he got his K1. Yeah. So I was like, well, I don't want to do that.
Yeah.
Yeah. So that's kind of how it was. But the guy that I was talking to, he was like, yeah, you give me $50,000, this is what I'll get you on profits and all this stuff. And I was like,
Yeah. That's one of the reasons I actually started Petrovibe.
Okay.
So if you think about coming from a management consultant where I'm looking for problems, I'm looking I can't even remember the name of the book now. It's because I'm sitting here in front of a mic, but fall in love with the problem, not the solution. And it's so true. And that's really sort of a backdrop for how I look at business, and that's one of the broader industry problems when you look at emerging companies, small independents, people who are selling you 1, 2, or 3 wells, or even multi-well packages that go beyond 3 wells, right? And historically, back in 2010, just to give you kind of an inflection point, the SEC came out. They blanketed Texas and closed down a bunch of oil and gas shops that were really just they were fraudulently positioning themselves in the market and making lots of money. There was a lot of news stories about guys that took it really badly. One guy committed suicide that I read about. Anyway, it was a tough deal, but that is the reputation historically, and far more people have lost in oil and gas than have won. That's not true so much anymore. If you look at the last 10 years in particular, there have been a lot of smaller players that have learned from what I would call the larger independents and the larger companies, and have grown discipline muscles in their business. They become more business savvy, and they have focused more on understanding how to actually produce profit, not just a tax deduction. And there's been an evolution or a maturation across the industry, but there's still one major thing that has been missing from essentially all of them that can make direct investment in oil and gas projects possible. You can invest in funds and stocks. There are different ways to get in oil and gas. It is a tricky and treacherous market to invest in. I know it sounds crazy coming from an oil and gas CEO who actually has a deal that's open right now, but I want people to make sure that they're looking at this the right way. Paul, what was Paul's last name?
I forgot. Right,
I don't know. Paul, yeah. He was on your podcast a month ago, and he was actually really smart in the way he looked at that. He talked about, you really want to understand not just the project, which you can't understand the depths of oil and gas, but if you know multifamily, there are a lot of similarities as far as how the operation works, but you really want to get into understanding the operator. Ask them to give you a KYC, which is effectively an anti-money laundering background check, right? Have their principals do that. They should be making that available to you. They should be running a third-party engineering report on the assets, and they should be willing to educate you on the risks. And we could talk about all the different things. They're all going to tell you the great things. I'm going to tell you the great things about, Petrovibe and our Petrovibe One strategy and the project, but I'm also going to tell you about the things you need to be thinking about, concerned about. And so when you think about how do you evaluate a deal, those are some good tips. I would also say that the one thing that, and there's only one project that I know of after evaluating 32 projects, and there are more than that right now, but if you look at what's going on Meta in social media and what's being advertised, there's only one project that does what we're doing, and that is us. And it's reinvesting profits. And reinvesting gross profits is really the critical difference. There's a lot of people that can get you a tax deduction. There's a lot of people that can give you some protection to your equity, although that's always a challenge. And you really need to look at the track record of the operator. And then there's the passive income that you're all expecting, that I'm expecting. The difference is, can you make that passive income compounding? And oil and gas is a depleting resource. How in the world can you make passive income compound out of a depleting resource? That is the key. That's why you have Exxons. That's why you have Shells. That's why you have EOGs. These are companies that reinvest their gross profits. Not all of them. They distribute some, but they reinvest and they grow through reinvestment, some through acquisition. That is the key to really growing a good oil and gas project.
Paul Graham. Sorry, I had to look.
Paul Graham. That's the guy. He was, super straightforward guy. Loved the direct feedback. I loved that interview personally, just because that was a lot in my space. He's not even an oil and gas operator. He just had a really good path on how to evaluate an oil and gas deal.
Yeah, we were talking about, and that kind of brings me to the next thing about the difference between multifamily and getting wells and doing that kind of stuff. Because I looked at both. I'm actually doing two multifamily deals now. It's just land. They'll get a big tract of land, and they start getting permits, and then
new development. It's not a fixing.
No, this
refresh?
is new. Yeah, this is new. But there's a lot of ones you can go out there and just go do. Like somebody that wants to go purchase like a Grant Cardone, you go out and purchase like a 162 unit. They call them doors, right?
Yeah, doors.
162 doors, apartment complex, and then have somebody run it. But if somebody were looking at doing oil and gas, they looked at the operator, they get all the information and stuff like that. The thing that always kind of held me back with it was that like, how would I know it's really going on?
Yeah.
So like if it's multifamily, like they're gonna take some pictures of a building,
sure,
and like they can't really smoke and mirror a building. Well, they can, I guess, maybe try, but like
it'd be tough. You could drive up on your own pretty easily and go see it. That's harder to do with oil and gas.
Right.
Yeah.
So how does that work? Like, let's say I gave you $100 million. Let's say I gave you not that much. Let's say I gave you.
You got $100 million? Is that
I
real?
do.
Should we be having a different conversation?
I do, but let's say that I gave you $1 million, and then you wanted to go out and deposit that $100 million or that $1 million into oil and gas. Like, how would I feel safe?
So,
could I run? Could I go buy the well?
Yeah.
Okay.
So first of all, you don't want to invest. So just straight up, and I wouldn't do it. And I would not. I would tell just a single well, even a 3-well project, way too risky. There's not enough diversification in simple quantity to have safe equity. I'm not saying those guys can't hit. I'm saying that historically across the industry, take the people out of it, it's not realistic. Doesn't mean that it hasn't happened. It doesn't mean that tremendous wealth hasn't been built off of 4 wells. There's a couple of really interesting stories of that happening, but it's a lot like pulling a slot machine. That's not the way to go. The way to go, and Paul talked about this also, is you want a diversified portfolio play towards that. You asked about how can I really know? Well, let me talk about the model that is the right model first, and then I'll talk about how to answer that question about how do you really know. The portfolio play is you want production in current wells that are being optimized and improved. So in other words, there's still what we call upside opportunity on legacy production. So you want, like, for example, the Petrified 1 project has 420 something producing wells. We've got diversification and risk mitigation simply by the numbers. You want something like that as sort of your cornerstone. That's how you protect equity, is to have a really good project. I don't want just the production, though. I want that production to have meat on the bone. I want to be able to go out and spend money on an investable capital way on, it's like let's go back to the multifamily. I may buy an asset that has 100 doors, right? That's only got 70% occupancy. I need to go in and refresh the place so that I can get rents up, occupancy up to 90% with 10% higher rent. That's the same idea that you want to protect equity. That's how you do it in an oil and gas deal to start with, where you get scale in your returns. Remember when I was talking about that compounding passive income? You get that from drilling new wells, some on those assets, or supplement that with another project that can scale, where you can actually create a lot more production quicker and then reinvest the gross profits of that to drill more wells. If I only use equity, then I'm actually hurting the project. I'm only able to drill a limited number of wells, and I better hope all of those are good, or at least a lot of them. And even the best wells, you're going to get a 1.5, maybe a 2x over 7 to 10 years.
Oh, wow.
That's not terrible.
Right.
But if we're wanting to look at the risk versus reward, I don't want to do that.
Right.
So what I need to do is I need to stack these declining. They eventually decline after the first 3-4 months. They start to decline, and then they taper off. And so you get a nice steady production, but it's 80% of less than it was. So when you stack these by reinvesting in gross profits, I can now drill, instead of drilling 8 wells off of the same equity dollar, I can drill 50 wells. And I can stack profits, which not only mitigates my risk, but it also increases my reward. So on a 10-year project, I create a sort of hockey stick effect where that's much more interesting than just taking distributions right away all the time. I want some distributions, but I want most of my earnings to go back into the kitty so we can hit this compounding effect. So that's really that's an important way to look at the right way to do an oil and gas deal. Lots of mitigation involved in that. That's the best way to protect your equity. There was another part to that we were going to answer. I don't remember.
Oh, how to like actually see the well? Like, if if I were to drive down or something like that.
Yeah, and how can you trust them? And at some point, it is a trust exercise. It always is a trust exercise. That's why you want to do a background check or get them to give you theirs. Third party is obviously good. Like we provide a third party on our data drive as an example. But what you want to do with that is you want to make sure that they offer an annual partner meeting on site? Will they take you out on a Zoom and show you? Now, they certainly, just like you said, we could certainly do that in real estate, and there's always somebody who can try to find a way to swindle you in a situation like that. At some point, you've got to be able to do that. But the great thing that you can always check is third-party regulatory. For us, you go to the Texas Railroad Commission website, and you can do it for free, and you can check to see, A, do we have our operator's license at all, which is called a P5. B, you can look at what wells are assigned to that operator license, and you can view it that way. So the other thing is there's a sense of transparency and authenticity that you can get in the conversation. What kinds of things are they saying, and how are they saying it? What are they talking to you? I said this early in our discussion, but are they talking to you plainly about the risks? Like, if you invest in the deal, I'm going to tell you all the things we're going to do to mitigate the risk, but I'm going to tell you it's possible you could lose your entire investment. You need to understand that. Mm-hmm. Why is that possible, and what are we doing to mitigate that? Those are the things we'll tell you, and then you've got to make an informed decision.
I know there's money to be made. So I follow a guy that works on rigs, like I don't know where, he's in Texas somewhere, but I see him making like a crazy amount of money. I've heard a lot of people, like, they just end up getting out of high school, and they end up, or not going to college or whatever, dropping out of college, and end up, working on a rig. Talk to me about, like, if somebody was an entrepreneur or somebody that wanted to get into oil and gas, like, how would they go about doing it? Would they just, like, start out at the low level at, like, doing a rig? Would they do it at the higher level, like my friend that would just sell oil wells? Like, how would somebody that wanted to do it, like, how would they go about doing it?
Yeah, I love that question, largely because we need more people. Now, AI is actually, it's interesting. That's actually creating some opportunities for us to gain some efficiencies for those that are willing to adopt it. Typically, the oil and gas industry is slow to adopt new technology in certain ways, but not from an engineering perspective, like how to improve fracking, which was a huge change in the early 2000s, and then another level that they achieved in productivity out of the changes they made in fracking back in 2016 and 17. So they're selective, I guess, as an industry, or we are selective as an industry in that. But to get into the industry, you can do that by education, becoming a petroleum engineer. That's a great way to get in. You can become a geologist. We need a lot more young petroleum engineers and geologists. One of my friends who's actually a partner in our deal, his daughter is a petroleum engineer. Wow. And she's actually interning for us as a junior I think she's at A&M. You should know that. But anyway, we need more of that. We also need, roughnecking is hard work, man. It doesn't last very long. You don't see a lot of old roughnecks out there, and roughnecking is, people are actually working on the rig and slinging pipe, and it is hard, dirty, tough labor, and it pays okay, but it's not when you get out in the ocean, that's when the roughnecking stuff can pay better. But when you're onshore, it's a lower pay grade, and so but it's important work. So if you have nothing, no background, no skill, and you're young and have a lot of energy and are a pretty tough person, that's a great place to go and learn a lot. And you can climb the ladder in those scenarios a lot of times. Then there's other, the business side. We need financial analysts. That there's a lot of them in the PE world. You can learn a lot about the oil and gas business, banking. There's a lot of opportunity on the financial analysis side. And then certainly entrepreneurs, that's tougher. It is a capital intensive industry and business. And so there's a lot of challenges, if you think about like Petrovibe as an example, getting started. I mean, it's literally by the grace of God that we are where we are, because it is so capital intensive. It's very difficult to get started and to drill wells, especially at scale. And so you have to have a lot of people that believe in you. You have to have a lot of people that that understand that there's something unique about what you're wanting to do as a team, and even getting the team recruited in the beginning to start that, and then to get investors to come alongside of you and be patient and think long term, which in this world, who's thinking long term, man?
Yeah.
It's so, I have so many conversations where people are looking, I want cash flow and I want a tax deduction and I want it yesterday. I'm like, you're not a fit. Sorry. Like, we can get you a tax deduction and we'll get you cash flow, but you got to be patient and look at the long-term return on this. If you're willing to do that, then this is a great place for you to be.
That's always one of the things that's very, very tough from the land deals that I'm working on, is a lot of those are like 4-year, and you can hang in there for like another 2 or 3 years where they get like more stuff built onto the land. Talk to me a little bit about your biblical stewardship. I know you're really big into Christianity. I am as well.
Awesome.
Talk to me a little bit about like your journey in that and what you're doing with it.
Yeah, I like that topic. Biblical stewardship. So I'm a disciple of Jesus, which means he's my Savior and my Lord, and that's how that's the direction of my life. So I like to tell people about it because it's been the most impactful, best decision I've ever made, if you want to call it a decision I made. I mean, he did all the work. I just said okay. And I'm so grateful for him. And what that's done is that's given me a man who also is fully God as a mentor, as somebody that I can follow and aspire to be like. And while I'll never be there until I shed this sin suit in physical death, he has made my life so much better and harder. That's part of the journey is all who desire to live a godly life in Christ Jesus will be persecuted. Paul talks about that in 2 Timothy. And sometimes that happens. I think in America there's a lot less of that, but it still happens. And it's a lot harder for people in much more dangerous parts of the world. But the big thing for me was this idea of that he's been training me up on for years, and I'm talking decades. I'm 52 years old, and I've been on this journey of biblical stewardship since I was about 18. And it's a big deal to me because for a long time it wasn't. And the story behind that is pretty simple. I just thought I didn't connect the idea of and by the way, Jesus talks about it, Paul talks about it, God in Scripture talks about it. It's one of the top 3 topics in all of Scripture is money and the management of it and how your heart posture is towards that. And I just didn't care for it because it seemed, at first it wasn't necessary. My dad did really well and I just didn't care about it. So I had what I needed. It wasn't a big deal. I had much other different interests and I thought, well, the money will be there. I didn't know any different until I went broke several times. And I started learning some hard lessons about that. And what God was doing and allowing me to fail forward, if you will, was training me on the importance of really money at the center of it is it's a tool, which I think even, people who don't claim Christ would tell you. But how do you view that tool? Like, where is it in relative importance in your life? And I still find it rather annoying in a sense, but I have learned to respect its usefulness as a tool, mostly so that I can do God's will. And that's the importance about biblical stewardship. And Jesus talks openly about it in multiple places, but the one parable that has really informed me is Matthew 25, where he talks about the parable of the talents being money, measures of money back in that day. And he gives a story about a master who's about to go away and assigns his talents to 3 different servants who are all supposed to be stewarding that to a better result while he's away on this long journey. And he gives them the amount of talents according to their abilities, which I always feel like that's an easily missed thing. Not everybody gets the same. Not everybody gets a chance to be a billionaire or a millionaire or whatever it is. Right. God. That's a metaphor. It's an actual metaphor. It's a real connection point. And so, long story short, I love that story because 2 of the guys double it. So there's a principle of multiplication, which we actually have taken and applied in our business. And there's also this idea of, this is not my money. It's not even my investor's money. It's God's money. And by the way, he doesn't need money. He's using it as a tool to train me and to train those that I have an impact or an influence over. And so when you think about that, I don't want to be the guy that basically came back. He was the third guy, got one talent according to his ability. And what did he do? He buried it in the ground. And when the master came back, what were his first words? And I never picked up on this until my family and I were studying this about a month ago. And this is the great new learning. He said, well, Master, I knew you were a harsh man, so I buried it in the ground, and here it is back. And I used to think, well, that's not so bad. I mean, at least he didn't lose it. You know, it's not like you put it in a slot machine. And what's the master? He goes, you foolish servant, you terrible person. He threw him out into utter darkness, which has, this whole story has a spiritual underlay, which is way more important. But he's using financial principles, sound, best practice financial principles to frame this story. And that part of the story I never got. And the whole point is that guy was passively aggressively blaming his master for why he didn't do what he was supposed to do. Well, I never picked up on that until recently. Anyway, Bible is so rich with new lessons when your context changes. Context is always the same. Context is important when reading scripture. You don't want to take things out of context, lest you be a false teacher or false reader. But I look at that and I love the depth of that story and how important that is for us as we look at pulling in people's capital. And that's why the guy you talked about that had designer suit and all that, that's great. I'm not saying you can't have nice things. I'm saying, where's your heart?
Right.
And we are, as an oil and gas business, is not our place to build wealth on the fundraising effort. It's hard work, but the money needs to go as big as possible into the development. If you start if you're taking 30 cents or 50 cents on the dollar and you're putting that into your, corporate spin up and you're not investing in the development of the project, you're setting everybody up for a lot higher risk quotient because you're not putting enough money into the actual development. And then you're creating wealth for yourself instead of putting the money in there and getting as quickly to development as you can so everybody can make money, because you should be sharing in the profits on the back only. You shouldn't be making a fortune, any kind of like wealth building on the front. That's not what raising money is for.
Right. All good stuff. A lot to pack. Peter, if somebody wanted to find you and wanted to get in touch with you, wanted to either talk to you about Christianity, Christ, or just natural gas, get involved in a project, how would they find you?
So, for the project specifically, I would say go to petrovibe.com/one, ONE. That'll tell you all you want to know about the project. Petrovibe is spelled with a V, Victor, and then a Y as in Yankee. So petrovibe.com/one. And then me, I mean, it's pretty easy to get a hold of me. I'm at Snell, PSNELL, at petrovibe.com. And you can even call me at 214-810-6207 or text me there, whatever you want to do. Happy to have conversations on oil and gas, or love to talk about Jesus probably more than anything. So we could do that too, but no pressure. People got to come to that conclusion on their own.
Right.
Just don't do it. Don't wait too long. You don't want to die and have that conversation after.
Yeah.
So
awesome. Well, thank you for being on the show. Appreciate it. Yeah.
Glad to be here. Thanks.
Awesome.
Take care, Chris.